Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, May 1st, 2026. I'm David Zarling. I'm here with Kevin Ferrari, the S&P 500, currently sitting at 72.58. Hey, thanks for being on the podcast 2 weeks in a row. It's pretty sweet. And we're in May.
So, sell in May and go away. After this podcast, you'll see my PTO request for approximately 20 days.
So you are going to go away. Now, are you selling? Are you doing that too?
No. It'd be pretty tough to sell at all-time highs, wouldn't it?
Yeah, all-time highs.
And on a Friday, too.
Oh, time. Yeah, it's really hard to, it's one of the most bullish things a market can do is be at a price level that investors are willing to pay beyond all other prices.
Yeah. Prices they never paid before.
It's pretty wild.
It is.
The Qs, all-time highs. Small caps, IWM, all-time highs. But the Dow Jones.
Thanks a lot, Pam Bondi.
Yeah, still not at the Pam Bondi level, otherwise known as 50,000.
Yeah,
if you don't get that joke, I suppose you could. I bet you could Google Pam Bondi 50,000 Dow Jones, and you get the inside track.
Yeah, there's plenty of memes out there for that.
Yeah,
and that's got to be probably forever what she's going to be known for, I guess.
Sad.
That's the way it goes.
Or botching the Epstein stuff.
Well,
or both.
Yeah, that's probably bigger. Yeah,
or both.
Probably both.
Yeah. So all-time highs, this would be a bad time to buy, right?
I guess it depends on philosophically where you fall in that arena. To us, no, right? Really all-time highs is really what we're kind of looking for the most part, or at least new highs relative to some type of time period.
Yeah, it's confirmation of an uptrend.
It doesn't get any better than that, really.
And I saw some information put out here by Peter Maluk, and if I'm mispronouncing your name, Peter, I apologize. But since 1989, money invested when the market is at an all-time high has actually outperformed money invested on any given day. 1 year returns, if you bought at a new all-time high, 13.5%. Any other day, 11.9. 3 year returns, 46. If you bought at the new all-time high versus 39 any other day. 82% 5 year returns if you bought at a new all-time high versus 74 any other day. That's kind of crazy.
I take it.
Counterintuitive.
Mm-hmm. Yeah, right. You probably have heard this quite a bit in education meetings with the whole buy low, sell high. Occasionally prospects will bring that up because, right, we essentially talk about doing it really the opposite way, right? For some of this, you're looking for new highs to buy.
Yeah, buy high, sell higher.
Right, which is hard for people to kind of wrap their heads around sometimes.
For sure. And they're really, in a sequence of all-time highs, there's only one last all-time high.
Right.
We're very familiar with the dot-com bust, highs in 2000. That were the last new all-time highs. But plenty of new all-time highs from 1982 through that point. Same thing with 2007 and 8. So there's always one last all-time high. And maybe we're marking it. Maybe this episode, May 1st, we're marking the last all-time high for a while. But how would we know? No one does.
You never know. And if you do, you're not going to tell anybody.
And it's most likely a guess. Only the Lord Almighty knows if it's the last all-time high. What are we seeing out of sectors year to date? When we look at the 11 major sectors in the U.S. equity markets, where we stand.
Yeah, energy still leading by quite a bit. Year to date around 32%, something like that, somewhere in there. Materials it's kind of grouped together really after that. Kind of materials, tech, industrials, utilities, real estate, really kind of all bunched together around 10 to 12%. But actually, oddly enough, materials really the only indice this week, at least, that's still in the red. But, if you, I guess, go more to like the industry level, I think, tech and energy really kind of stand out at that point. Because obviously, like semiconductors, like we've been talking about quite a bit the last couple of weeks. I mean, they really stick out like a sore thumb. SMH up 41% this year. XES leading the way around 55.5%.
Well, and isn't that
Things like,
information like the fact that an ETF like XES is outperforming XLE, XES being oil and gas equipment and services versus just broad energy?
hmm yeah,
That's kind of like
I
that
think
gold
so.
miners gold relationship.
Right. Yeah, a little bit. I mean, yeah, XOP like buying a little bit closer to 40%. So, I mean, even XOP outperforming energy overall. Clean energy, you kind of throw that in there. I mean, those areas aren't really outperforming broad energy, but really it's pretty close. Using like PBW for clean energy, around 26%. Solar, TAN, 2021. I mean, really, even MLPs really aren't doing too bad this year either. Sure.
Yeah, no, definitely notable, and I think it's an interesting mix of sectors that are leading. You've got some very cyclical, sensitive energy, materials, industrials, and then you got your risk on in XLK, which you and Ian did a great job covering last week. A lot of it driven by semiconductors, AI related items. Then you have your borderline defensives, utilities, real estate, staples. But then your underperformers barely positive or negative on the year: discretionary, communication services, financials, healthcare.
Financials still red on the year to date so far. Just really can't get it going.
Right. So it's an interesting mix.
Yeah, it is a weird mix. But I mean, we're even kind of talking before we started recording, even in some of those other areas, right? Like real estate, I feel like kind of I mean, even utilities stand out a little bit too. But like in real estate, right? Like a lot of your, more tech related stuff, like your data centers and, things on the techie side of real estate, which kind of stands out. Well, I guess not to jump ahead, but like some of these, other areas of the market, even like just consistent themes with, computer processing power. I mean, really, that's kind of the theme that stands out regardless of the industry you look. Like a
No,
lot
that's
of
a great
electronic
point.
components, whether they're manufacturing, it's pretty consistent across the board.
No, you can jump anywhere you want, Kevin.
I try not to jump too much. I don't have much of a vertical.
This is, you're like me. You can jump over a credit card.
Maybe might pull something, but
Yeah, yeah. It's amazing how that happens as you get older. I remember a day where I could actually dunk a volleyball, and now I get nervous if I were to jump that high. It's crazy. But no, I think to your point, when you look across the fingerprints of semiconductors, memory, tech hardware is just apparent across multiple ETFs or multiple areas when you're looking. Even in utilities, you've got some energy related utilities that are more tilted towards data centers. So it's pretty interesting. And you mentioned clean energy, some of that trying to fill gaps in the grid. I will say, though, there's something going on in offshore drilling when you look at some of those stocks. And then, of course, everybody listening to this is going to seen the price at the pump go up because the gasoline futures have been on the move. And I'm sure the narrative, right, as well, we're still dealing with the Strait of Hormuz and Iran thing. And I think that's valid. Where that stops, I have no idea.
Mhm.
What about materials? What are you seeing? Because that's the second best sector. And a lot of that was driven early by gold
Right.
miners and silver
Yeah.
miners.
Yeah. Which really, I mean, they've cooled off quite a bit over kind of the, last few months. But I mean, I think, steel looks really good, at least current day. SLX out to all time highs currently, assuming they can, kind of stick this here, which is pretty good to see. And even, rare earth, like a lot of your rare earth materials. I mean, they've had, really pretty good, probably year and a half, 2 years.
Yeah, you're talking like
Using-
ETF REMX.
Yep.
Yep.
So, I mean, not out to all-time highs, but I mean, if you look, going back a couple of years to like 2022, like roughly like this $105 level is a pretty nice level to see it clear that.
Yeah, for sure.
So, yeah, I think materials definitely is cooled off. Yeah, a lot of that for year-to-date returns still kind of miners baked in, but can really argue with steel going out to all-time highs? I mean, I don't think so.
Right. What about industrials? Industrials also sitting just behind tech
Mm-hmm.
year to date. I mean, they're neck and neck. What are you seeing out of industrials?
Yeah, I think there's kind of two stories there a little bit, right? Like we kind of talked about before with how far-reaching some of that semiconductor and like more techie side of that kind of plays into it. Like a lot of your electronic component manufacturers and things like that doing really well in the year. I mean, as far as like performance contribution, for a lot of those, industrial focused ETFs, I mean, they're kind of leading the way. Like it would be a good example of that. Like your ETFs, like so like robotics or IQM intelligent machines, like a lot of those are pretty good or pretty high weightings to like semiconductors. So I mean that theme's definitely in play. Now you've kind of been bringing this up too a little bit, like a lot of those ETFs that focus on more of the, what's the term for it? Reshoring or reshoring, like trying to more US focused. Industrials are doing pretty well, but like even in there, looking at like RSHO is one we like to focus on. I mean, electronic components and like manufacturing related to that or electrical equipment. That's pretty much the highest contributor there, year to date at least.
Yeah, so it's the hardware versus the that supports a lot of the tech. You could almost call it like supply chain.
Yep.
And that's kind of goes along with AIS, an ETF for artificial intelligence is, heavily into the hardware and electronic components that go towards that and not the software. Like when you look at software, I know that's been a narrative lately. IGV, your more traditional software, things like Microsoft, Salesforce, Oracle, Palantir, definitely off the highs heavily. But then you look at another quote unquote software ETF, IGPT, and that's holding a ton of semiconductor names. So not all software ETFs are the same. And then you mentioned for AI, data centers continue to be a theme. Anything else there that's notable in the AI?
I mean, not a ton. Well, and I guess just before I forget, on like industrials, I mean, it's not like it's only things that really fit that theme. I mean, Caterpillar out to all-time highs yesterday. I mean, down a little bit today, but still looks really good.
Yeah. And that's an international name too. Like that's a major global industrial firm, even more so than Deere.
Mm-hmm.
I mean, nothing runs like a Deere, but you've got Caterpillar, a multinational company, new all-time highs, a leader over Deere. So your point is valid. It's not just, there's smatters of other things that are going on here. That's not just AI and semiconductors, but definitely infrastructure for energy related going on for sure.
Right. And even, like in like the agriculture space too, really isn't doing too bad. Like MOO is one you can kind of use for that. Like year to date up like 15%. I mean, like you kind of dig into that too there a little bit, which is kind of almost backtracks a little bit into materials. Like some of your ag related materials, those companies are doing pretty good, which I mean, I know I've heard people talking about too, at least in the ag space, with kind of the Iran and like the Strait there. I guess that's definitely been pushing up the prices of like fertilizers and things like that quite a bit. So, maybe that's kind of what's going on there. But yeah, I think it really just comes down to, as far as like alpha or relative strength concerned, I mean, it's a lot of those AI related areas that are kind of showing the alpha.
Yeah, for sure. Let me ask you this kind of, because we haven't necessarily talked about this a bunch recently, but your Magnificent Seven, your mags in prior years, not this year, even last year, were your leaders. And I think it's interesting that you have the following characteristics. You have NVIDIA underperforming semiconductors as a whole. You have Apple on a relative basis, S&P, kind of going nowhere for 6 years. But yet Apple's about to go, is trying to go out to new all-time highs as we speak. Maybe by the end of the day it's not. But if a large cap like Apple decides to go out to new all-time highs, there's got to be something to be said for that.
I mean, even Megs itself is really not that far from all-time highs today. I mean, you're talking not quite 3%.
Right.
So, I mean, by the end of next week, we could be there.
Yeah, it's
And
interesting.
I mean, even Fangs kind of fought back here a little bit too. Which, I mean, when's the last time we talked about Fangs really being in the picture? I mean, they're a little further away, closer to like 4% probably.
Right.
They've kind of, there's been a little bit of a resurgence there as well.
Well, both of them reclaimed their absolute 200-day moving averages and important levels. We talked a couple episodes ago about the $63 level on MAGs. Cleared that to the point of a false breakdown. FANGs is above an important level around 68. Maybe the kids would say 67, 67.
Don't start that again.
But so it's notable. And then you have small caps going at a new all-time highs. So here you have MAGs potentially setting up, Apple trying to go at a new all-time highs. I would argue NVIDIA is sitting in the back pocket. And what I mean by that is NVIDIA tried to go out at new all-time highs on Monday, has since pulled back. So we're back below 206 on NVIDIA. NVIDIA has been underperforming semiconductors overall. If that decides to lead again, makes you wonder what the possibilities are going into the end of the year. And then I think about, we still have on the AAII survey of what do you think the next 6 months brings, we have bears outpacing bulls still, even though the market's at new all-time highs.
Right. That's not very toppy feeling, right? That's really not what you would expect as far as like sentiment's concerned. I mean, that's the thing with NVIDIA, right? Is that the catalyst that like kicks us off into what we would expect, to close out the year as far as like seasonality is concerned.
Right.
On like Q4, maybe. Definitely wouldn't be shocked at all. And that's the thing, even just mega caps in general out to all-time highs, MGC. Some mega cap growth, even MGV, trying to work through those previous highs. Hasn't been able to do it yet today, but it's right there. So
well, yeah, it's so interesting you bring that up. And then you look at microcaps, IWC versus IWM, positive alpha in that relationship year to date, and an uptrend since the tariff tantrums in April of last year. So while we don't have like these massive breadth thrusts, like a Zwig breadth thrust or, 290% up days back to back, that type of thing that we saw in spring of last year, you do wonder, because there is such a thing as a Whaley price thrust, and there's only been 8 of those since 1950. And the forward-looking potential returns on that, again, not a guarantee. We didn't get the Zwig breadth thrust, we didn't get breakaway momentum, but here we have a potential for a breadth thrust, or a price thrust, I should say. And then you look at what RSI, a momentum indicator on the NASDAQ 100, which Roy Maddox pointed this out. NASDAQ 100 RSI went from 28 on March 30th to 70.5 by April 15th. So just 11 trading sessions. And that's the fastest oversold to overbought transition in the NASDAQ 100 in its 4-year recorded history. That's kind of wild. And then according to Bespoke Investment Group, this is the fastest move from a correction. So the corrective behavior that we had in March, this response that we've had in April is the fastest move from a correction to a new record high since 1928. Kind of wild. And the forward data, which we won't know. Again, you wonder in a midterm year whether we still get that, like you talked about early, sell in May and walk away.
Slow summer.
Do we get a slow summer going into midterm elections? And it's really interesting. Like, it's fun to talk about these things because are we tilting towards midterm election year seasonality, or are we saying that this is year 6 of an 8-year presidency? because year 6 of an 8-year presidency has incredibly bullish seasonal characteristics, whereas a midterm year in general does not. So it's kind of a mixed bag there because we have the experiment that happened in between the Trump presidencies.
Right.
Can I call it that? Can I call it an experiment?
Yeah. Yes. Why not?
That's a good answer. I was kind of putting you on the spot there. That was good.
As my grandpa would always say, "You be the boss.
You be
do
the
what you want."
boss. Okay.
So he'd say that to everything.
Right.
Ask him a question. He's like, "I don't know. You be the boss.
Okay. It's
Do what
good.
you want."
It's good. I think at this point, I do want to highlight the supporter of this podcast, the Adaptive Select ETF listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Through proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. And I think it's interesting that product did adapt, that it went from a protective mode to reparticipating pretty quickly last month. I think it was, by March 23rd, protection, and by the following 2 weeks, April 13th, participating again. It's pretty adaptive.
I'd say. I think even it's always interesting to see how the holdings shake out in there too. I mean, your top 2 sector weightings, energy and tech, was pretty interesting. Intel, largest holding in there, had a pretty good week, obviously. So, SanDisk, obviously, on the storage side of that we've been talking about. Amcor in there too, I think, aren't they, a semiconductor?
Mm-hmm.
So
when you bring up a good point with Intel, I mean, we're now heavy into earnings season. And as our listeners will always hear us say, it's not the earnings themselves. It's the price reaction to earnings, weeks to months out. And so far, so good for Intel for its earnings price reaction. And we've had other, large cap, mega cap stocks report earnings, kind of a mixed bag out there, but that's really what you're looking for.
Especially in your Mag 7. I mean, really the only ones that had negative, well, I mean, NVIDIA's got a way to go. Yeah, I think they're later in this month. But Amazon, Apple, pretty good. Really the only ones that stood out, like Meta, it's really a rough look there on their earnings. Or was it the day following? Because I think they reported after the close. Gap down, probably close to 8.5%. It's been kind of a rough look for them. And Microsoft too, not the greatest reaction there necessarily, but not to that extreme. I think, so far it's been more positive than negative, which is
for sure. So we got a couple minutes till we wrap it up here. And I want to get your opinion on maybe on credit or fixed income, maybe some international or currency related. I'll let you take it where you want to go. But I'm curious on your thoughts on, whether it's junk bonds or high yield or convertible bonds or even international markets, what we're seeing out of those.
Yeah, like junk, like your high yield areas of credit. I don't know. I mean, as far as, like a junk versus AGG, pretty much, I mean, I guess slightly underperformed, almost flat now. I mean, it's kind of come back here a little bit. It'd really be nice if, J&K could kind of come up here and retest like $98 again, or at least get up above 200. Would be good to see. So, I mean, a little lethargic yet. I mean,
and if there was going to be
mixed bag,
if there was going to be a red flag, if there was going to be was this the last all-time high? I think there might be something out of credit. The fact that junk bonds and high yield bonds have not made new highs while the S&P and Qs have. I'm not saying worrying. I'm just saying, that's okay. We got to pay attention to that. You'd like to see these clear out to new highs as well. What about international? What are we seeing there? Are all emerging markets made the same, or we got weighting issues to consider there too.
Oh yeah, big things, differences there. I mean, like, I've kind of talked about this, I feel like a couple times throughout the year. China really lagging behind. So if you look at emerging markets, ex-China, was it EAM? I never remember the ticker for that one.
XC, EM or
EM.
EMXC, the one that
MXC
excludes
removes
China.
China.
Yeah.
Yep. Out to right around all-time highs. I mean, we had an intraday all-time high. We'll see if that sticks today. But, definitely doing quite a bit better. And then it comes down to the tech weightings, really. Again, right? So what? Tech and EM, 36%. Semi is 21% of that.
Isn't that
You
wild?
still have the same.
Would you sit there and think about emerging markets and you think about weightings? I don't think that's the first thing that comes to my mind.
No. I mean, it makes sense when you think like TSM, right? I mean, that one I kind of always forget about that it's out there. But I mean, you even have like what we were talking about today still, like those electronic components, your hardware, storage, things like that, as far as like performance contribution. I mean, they're also leading the way internationally as well.
Yeah. I mean, you got
same thing.
TSM, Samsung, and SK Hynix equal 25% of EM ETF, the emerging markets ETF. Really interesting.
Mm-hmm.
Well, Kevin, I appreciate you jumping on here and doing this with me. We've reached the end of our time. We want to always ask our listeners, if you like this, please share it with your family and friends. It's a great thing to enjoy with a cup of coffee, maybe a cocktail, or maybe on a walk, or maybe while you're on the treadmill. Doesn't matter, but we ask you to give a high ranking on your platform of choice. And Kevin, thanks again for being on here with me.
Absolutely.
Have a great weekend, everybody.